this video, we are going to discuss about market structures. Market structures are basic formations on the chart. They reflect trend. They are also a way of plotting swing tops and swing bottoms based on Dow theory. So whenever the instrument is in trend, whether it's bullish or bearish, they tend to create higher highs and higher lows if the trend is bullish. If the trend is bearish, it will keep on making lower highs and lower low. The method of plotting higher highs and higher low, or the method of plotting lower lows and lower high, is known as market structure. Market structure is a 3-candle pattern. Whether it's a bullish structure or a bearish structure, it's a 3-candle pattern. In market structures, we have two structures. One structure is bullish, which is known as market structure low. So from the term you have understood, it is a method of plotting swing low. So it is known as market structure low. The other type of market structure is market structure high. It's a method of plotting swing high. So the name is market structure high. So there are two types of market structure low and market structure high. They are abbreviated as MSL and MSH, whereas MSL stands for market structure low and MSH stands for market structure high. It's a way of plotting swing highs and swing lows. Now that we have understood that there are two types of market structure, let us understand how to plot them. So market structure low is a method of plotting swing low. It's a bullish pattern. Whether the trend is bullish or bearish, market structure low can get formed in any type of trend. Based on where they are forming, they give us idea of whether the markets are going to be sideways or they are going to be trending. So market structure low is a bullish formation and it's a 3-candle pattern. So how does it get formed? So it's a 3-candle pattern. That means it needs 2 bearish candle and 1 bullish candle. 2 bullish candle means you need a bearish candle. The next candle, the first candle is a bearish candle. The next candle is also a bearish candle and it is forming a lower close. The third candle is a bullish candle which will close above the previous open, the second candle's open. This is known as market structure low. So 2 lower closes and 1 higher close. This is known as market structure low. The price pattern, the structure says the trend was bearish, so it was creating lower lows. Now at one point, the markets or the instrument is unable to plot one more lower close. In fact, it plotted a higher close. It formed a bullish candle. So it forms, or it's a method of plotting a swing bottom. The other way is market structure high, which is a process of marking swing high based on Dow theory. So it's a method. Now it's exactly opposite of market structure low. In market structure low, we had 2 bearish candles. In market structure high, we'll have 2 bullish candles. And the third candle is going to be a bearish candle, which indicates the buying momentum has faded away. You will have the first candle close, which is bullish. The second candle close will be higher than the previous candle close. So you are forming a higher high. The third candle close is below the previous open. So the method of plotting market structure high is 2 higher close and 1 lower close. So the method of plotting of swing high and swing bottom is through market structure high and market structure low. As we discussed, this pattern can be plotted both in bullish trend and bearish trend. Why? Because if trend is bullish, you will have higher highs and higher lows. That means if a higher high is getting plotted, still you will have a market structure high and a market structure low. So higher high is your market structure high, whereas your higher low is a market structure low. So whenever we plot higher highs and higher low, we are in a way plotting market structure high and market structure low. If we keep on getting higher market structures low, then it's a method of plotting higher low. In a bearish trend, we'll still have market structure high and market structure low. The lower highs are plotted through market structure high and lower lows are plotted through market structure low, because from every lower low still there is a bounce. Market structure low also reflects a bullish momentum or a bullish bounce. So the method of plotting swing high and swing bottom is through market structure high and market structure low. It is independent. This pattern is independent of trend. So to have a larger analysis of trend, we put together multiple market structure high and market structure low to make a sense of the trend. If we keep on getting higher market structure low, that means the trend is bullish. And if consecutively we keep on getting lower market structure high, that means the trend is bearish. Just pure based on price, we can understand trend. It's a method of plotting trend through pure price action. The first market structure low of 2022 was plotted on 1st of Jan. Then the next market structure high, which is a higher close, so you have two bullish candles and then you have a lower close, right? So we have a red candle on 6th of Jan 2022, which collectively these three candles together formed a market structure high. Similarly, if we go to the next part between 13th Jan and 22nd Jan, in between we have a market structure high, two bullish candles and one bearish candle. This bearish candle is engulfing the previous candle. So you can have an engulfing pattern confirming that it's a market structure high because you have two higher closes and then one lower close. Now if we come to the 3rd of Feb 2022, we have one more market structure high. We have a close, a higher close and a lower close on the 3rd of Feb, which is confirming that this is a market structure high. So the rule here is we need two bullish candle and the third candle is bearish, but it won't be the case every time. What if the markets gap up or gap down? In fact, they are also going to plot a higher close or a lower close based on whether they have gapped up or gapped down. So we have to understand the nature of the candle also. So coming to the next example, which is on 10th of Feb and 11th of Feb. If we see here, we have two bullish candles and the third candle is a bearish candle and a gap down. This also is collectively forming a market structure high. So on 15th of Feb, we have market structure low. We have two bearish candle and a bullish candle. So it's a way of understanding the price, and if we see every time a market structure high got formed, that high is not taken out. It's there on the chart. Every time we see a market structure low, those market structure lows are getting breached. What information it is sharing? It is sharing that the markets are bearish. So getting lower lows and a higher low, which is through a market structure, is suggesting that the trend is bearish. It's the easiest way of understanding trend purely on price. The next market structure low got formed on 25th of Feb. There are two bearish candles. The first candle, then we have a huge gap down, and the third candle is a bullish candle which is closing above the previous open, which is confirming that it's a market structure low. Now the next candle is interesting. The next market structure low is very interesting. So if we come to 8th of March, if we see here, we have two lower closes. So we have a close, then we have a doji candle. The second candle is a doji candle. The third candle is a bearish candle which is engulfing the previous price. So if we see, we have two bearish candles, then the market gapped down and showed a very strong momentum and completed itself to form a higher close. Then the recent close is above the previous open. So two lower closes and one higher close, which is suggesting that this is a market structure low. The next market structure high got formed on 21st and 22nd of April. If we see here, we have two bullish candles, so two higher close, and the third candle is a bearish candle. We have a gap down and the market saw some bearish pattern and the bearish movement. Now if we come to 28th of March, now if we come to 27th of April, and if we see here, we have two higher closes. The first candle is a bearish candle, right? The next candle is also a bearish candle. So two candles, the first candle is bearish, next day markets gap down, it is bearish. The next day markets have opened gap up, which is above the previous open, which is forming market structure low from the day start. Now on 19th and 20th of May, if we see here, we have two lower closes and then a higher close, forming a market structure low. Then if we see, we have two closes, two bearish candles, but if we see, it is an engulfing pattern. It's a kind of an engulfing pattern, bearish engulfing pattern on 9th of June 2022. We have two bearish candles side by side. But interesting thing here is we have a bearish candle. Next candle is forming a lower close but in the same price zone. And the third candle is going above the previous candle, which is suggesting that a market structure low got formed. Now, coming to 16th of June, if we observe here, it's a strong bearish candle, which is suggesting strong bearishness. The next market structure is very interesting. So if we see on 16th of June, we have a bearish candle. The next candle is a bullish candle and it's a doji pattern. So doji pattern, bullish doji, but it is gapped down. So the closing is still below the previous close. So even if the candle is bullish but closing is below the previous candle, can be considered as part of market structure low. And the next candle, if we see, we have a higher close. So the price has gone above the previous doji candle. We have got a closing above the previous candle. So if we see, we have two lower closes. The first close got formed because of the strong bearish candle. The second candle got formed the lower close because of gap down. Though the candle is bullish, but it's gap down. So we still have a lower close. The third candle is forming a higher close, which is again a bullish candle. If the third candle, instead of bullish candle, if it would have been a bearish candle, but above the previous close or previous open, still it would have been considered as part of market structure low. In market structure low, what is an important ingredient? The important ingredient here is we are just checking the price structure based on closing prices. Closing prices for a candle is critical. Identifying the swing bottom and swing low is very critical. So, forming a low based on the closing prices or forming a lower close based on the closing prices, whether we have a gap up or a gap down, can be part of market structure. This is a very important point that we have to understand. We can consider a higher close or a lower close if we have a gap. Now, if we just go back and if you have heard about morning star and evening star pattern, morning star and evening star pattern are also market structure high and low because they get formed because of gap down. So if you remember morning star pattern, morning star is a market structure low. You will have a bearish candle, a gap down, the next candle forms a strong bullish Marubozu candle which is above the previous close. So morning star itself forms a market structure low. Similarly, if we see a evening star, it is a market structure high. Why? We have a strong bullish candle, a gap up opening forming a doji, the next day price falls with a gap down which eventually forms a lower close. So two higher closes, one higher close is formed through a gap up opening or a gap up closing, and the third candle is through a gap down and the price starts drifting lower. So gap is very critical for the identification of market structure highs and market structure lows. I am sure you have got a good sense of understanding market structure and how to plot market structure. It's a pure price pattern, easiest way of understanding the direction of the market, the trend of the market.